please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome to Business Lunch. I am Nisha Podar and with me is Sonia Shenoy. Sonia, good afternoon. Not looking good at lunch hour today. Markets at the lowest point of the day. Nifty 50 has lost about 100 points. Sensex, mid-cap universe really taking the cut deeper, and a lot of that can be alluded to the kind of rupee weakness that we have seen. It did touch lower levels of 71 point more than 9 to the dollar and now has recouped by a few paise, but then that cannot be really seen as any bit of recovery because we have seen a massive weakness in rupee coming in this particular year, down by 13%. But we are not the only currency. In fact, global markets have been today weak, so not aiding to our sentiment, and also global currencies are also weakening, especially in the emerging markets, Sonia.
Yes, you know, the MSCI India index, the dollar denominated index that we track, that at the start of the week, it was down just 1% in the year. Now it's down 5% for the year. So it's catching up to the fall that we've seen with MSCI Emerging Market and MSCI Asia ex-Japan Index. So these indices should come up for you. Big slides is what we're seeing because of the way the rupee has been falling. The rupee is now down almost 1.8 rupees in the last 6 trading sessions. This is the biggest fall in the last 6 days we've seen in, I think, many years now. Yes, look at that. Those are the flashes for you on your screen. But we'll talk about the rupee in greater detail. Across the globe as well, Asian markets have been broadly lower. Overnight losses on Wall Street is what we've seen. Trade talks between the US and China and Canada are set to start again following the failure to reach a deal last week. European markets have also opened lower. But the big story really is the rupee relentless pressure over the last 6 days, another record low. Lata Venkatesh is here with us. Lata, well, I think it's bye-bye to foreign holidays for us, at least for the time being.
Well, for the moment, the rupee's fall was troubling because crude prices actually fell by $1 compared to what they were 24 hours ago. And that was expected to be a bit of a sucker, actually, to the rupee. And a few Asian markets seem to show some fight, like in Philippines and Indonesia. We have not seen too much of local currency selling. Though, you know, that's not the uniform experience. Won has fallen, the Korean won. And, of course, the rand and lira continue to be in trouble, our targeted currencies. Though, you know, we are nowhere near these kind of currencies. What did rand or South Africa report in terms of growth? A contraction of 0.7. We showed an expansion of 8.2%. So it's not to confuse the types of markets, but merely to say that today, some of the Asian currencies were showing a little bit of respite from falling, and therefore the expectation was that the Reserve Bank would probably come in and defend, which they probably have done close to 72. The market is only now watching the Reserve Bank. The general belief is that until now, both the Reserve Bank by its behavior and the central government officials by, you know, various stray conversations are almost happy to let the rupee go. But at some point, that happiness becomes an easy sale, easy target for short sellers. It looks like the market may be entering that terrain. And it appears that around 72, there seems to have been some support. So now all eyes are only on whether the government makes some noises saying that rupee has fallen enough and we are a strong economy, or somebody from RBI makes a statement that we will not allow our markets to be disrupted. You know, basically talk. Any such talk will be seen as a very big crutch for the rupee to be bought back again. All eyes are on policymakers now, either Delhi or Mint Street. Just to add on the bond markets, again, because of the fall in crude prices, the fall as in minor fall in crude prices, it was expected that the fall in bond prices will stop. But no, the yield has actually gone up from 8.06 overnight to 8.12. So a 6 basis point rise would mean a fall in the price by almost a rupee or about 70 paise. So here again, the expectation is that the Reserve Bank did not do an OMO last month, and so that also has rattled the market. Now the yield is rising because the expectation is that as rupee goes to 72, then everybody's inflation forecast changes. You know, everything becomes expensive, including crude, and therefore now you're looking at a 6% inflation. So you can justify 1-2 rate hikes, and some people even more, and that's the mood in which the market is. But looks like some action will come from the central bank. They usually know when to press the levers, so we should expect that this time around too.
All right, Lata, thanks so much for putting perspective to all the movement in rupee as well as in bond yields right now. 71 rupees 89 paise to a dollar. That's where rupee is. Some bit of support there above 71 rupees 90 paise level today. In fact, let's get in some important opinion coming in on rupee movement and the liquidity overall. We spoke to Thomas Lloyd's Nick Parsons, and he says that the rupee is very close to a turning point and adds that the currency crisis will abate as perception on Fed hikes really recede in the market.
India seems to be a victim of its own liquidity. When you have an almost indiscriminate sell-off in an asset class, then investors sell what they can. Well, we've been to 71.67 now. We're very close to being at or near a turning point. But I think once we see a change in perceptions on US interest rates, then I think the pressure is going to be off. And then I think we'll start to look a little bit more selectively at the individual currencies. And when the market does start to look more selectively, it surely will ask itself, why on earth was India the worst performing currency in Asia in the third quarter of 2018? Because that simply is not warranted by the economic fundamentals.
Okay, so emerging market currencies keep tumbling, but a lot of experts are saying that the fear of contagion may be overblown. Let's also keep our eye out on what's happening in the commodity space. Oil prices have been rising ahead of Storm Gordon. We have Manisha Gupta, our commodities editor, who joins in. Manisha, 77.5 now on Brent.
Oh, well, yes, you know, we did see 79.5 as well yesterday. So from those kind of levels, it definitely has come off. We did see 3.5-month highs yesterday. That is one thing that should be supportive to the rupee, to the Indian equity markets as well. But that clearly does not seem to be the case. But having said that, it is a positive move that we have seen come in for the crude oil prices. Still nearly up 10 to 12% in last 3 weeks. But we have seen the prices come off as the fear of the hurricane hitting Gulf of Mexico oil facilities seem to be easing off right now. Nearly 9% of that output was cut yesterday in anticipation that Hurricane Gordon will make a landfall on those facilities. But that seems to be moving away eastwards now. And also it's turned into a Hurricane 1 category, which is not so much of a damage that you can really expect. On the other side, though, the markets do not expect much decline in crude oil prices from here. You will really have to live with this current levels because the Iran sanction concerns are still on. We have seen some positive data come in from China in the last couple of sessions as well. So those things tell you that at these current levels, the crude oil prices perhaps will be bought as we go forward from here.
All right, Manisha, thanks so much for getting us that update on crude oil prices. Slight recovery there, but remember that the pronounced weakness in rupee that we have seen is not going to help our import bill when it comes to the crude prices. So that recovery or some bit of relief coming in crude prices is nothing to cheer about. The markets at the low point of the day, Reliance Industries at the low point and dragging the overall market down. With that, we'll slip into a short breather on the show. But BEL, that particular counter tanks over 12% and Muthoot Finance surges 7%. So
the afternoon for sure for the bulls, that is. We should pull up the contribution plate. In the last half an hour, you've seen a lot of pressure in names like Reliance Industries. So a lot of heavyweights now buckling. HUL is now down almost 10% in this week, and we're not even halfway through the week. A lot of redemption pressure seen in large cap names. There was delivery-based selling of 400 crores in HUL yesterday. There is some more pressure. Then, as you can see, 20 points from the 80-point fall on the Nifty is contributed by Reliance alone. Almost 20 points. But let's also take you through some of the other big casualties. BEL, one of the biggest casualties in the market today, despite the management assurances that the new pricing policy will not impact profitability or margins. Double-digit falls seen there. So let's hear out what the chairman and managing director of the company, M.V. Gautama, had to say earlier in the day.
For the spares and services, there is no change. 10% profitability is allowed. For the main equipment, earlier we were charging only on the value addition, the profitability, but not on the buyer-nominated equipment, buyer-furnished equipment. Okay. But now, a uniform 7.5% for the complete is allowed. So they have rationalized that removing some of the items, the entire items can be considered, and it is at 7.5% now.
All right, let's shift focus to a stock which is doing well today. Muthoot Finance is on our radar, and the NBFC reports that the highest QOQ loan growth in 11 quarters this time around, while asset quality improves significantly for this particular company. And the management tells CNBC-TV18 that they will start their own mutual fund business in the next 6 months.
Mutual fund is concerned, we have received the in-principle clearance, and we have a 6 months time to start it. Going forward, this should go up to 1,000, 2,000 and 3,000 crores of portfolio in the next 3-4 years.
Okay, well, Spark and Sun Pharma have gotten a big boost today. In a conference call, the Spark management reiterated that Halol's plant's status as voluntary action indicated status says this will help the company pursue drugs like Zelpros and Ellipsia XR as well. Listen in.
Our partner's manufacturing plant supporting Ellipsia and Zelpros has moved from OAI, that is official action indicated, to VAI, which is voluntary action indicated. The shift in compliance now allows us to pursue marketing approval from the Sun Halol plant. This regulatory turnaround is certainly a positive for Spark, allowing us access to additional milestone payments from our commercialization partner and a potential launch in early 2019.
All right, take a look at rupee before we go ahead with the show, and 71 rupees 85 paise against the dollar. So some bit of support really came in below the 71 rupees 90 paise against the dollar. It had touched those lows and has recovered slight bit. Is it going to improve further? Needs to be seen. And with that, market is also shaping up and is getting some support at lower levels as well. In fact, as when we look at the contribution chart, there are a few more frontliners really adding to the green space and giving some bit of support to Nifty 50. So keep an eye, rupee appreciation or recovery as well as the market recovery. They are mirroring each other throughout the trading session, and that's what we need to keep a watch out for. But in an important corporate development, and Singh brothers Malvinder and Shivinder snap ties in a shocking news development that is really coming in. Shivinder Singh to take brother Malvinder to NCLT for undermining the interests of Fortis Healthcare, RHC Holdings as well as Reliance Enterprises. Now remember that Shivinder Singh stepped down in September 2015 to join spiritual movement which is Radha Shaumi Satsang Bias, and after that, now this particular split has really developed between the two brothers, while Fortis Healthcare in itself is really in the midst of a lot of allegations, and there is investigation going on that particular counter.
Sure. We need to get back to the markets because there's a huge slide that we're seeing in the Asian markets. Hong Kong is down almost 800 points now as we speak. Remember, there's an emerging market turmoil going on, of course, but developed markets like Hong Kong, etc., are sliding. The Japanese market as well is seeing a triple-digit cut. So Asia is not having a good run at all. Just look at that, 750 points straight off the back across the Hong Kong market is what we're seeing. So do keep an eye out on all of that. Our markets too are following suit. But one pocket that has seen a lot of pressure lately is the FMCG space. In fact, stocks like HUL, Nestle, Britannia, Jubilant Foodworks, Godrej Consumers, they were the stocks that gave you the biggest returns last year, but they've seen the biggest beating over the last 2 to 3 days. Why is the street suddenly averse to valuations? Mangalam is here to give us some details. Mangalam, finally, the street is waking up to the fact that valuations are expensive.
That's right, finally. But the question is, why suddenly? Maybe perhaps because of the reason you spoke about the markets, how they were falling. You know, people are cognizant of the fact that the crude is higher, rupee is also weakening. So people are perhaps protecting the money. They're taking profits wherever they are finding it, and they found it in FMCG space. So the likes of Godrej Consumer, Jubilant Food, Britannia, HUL, all the stocks that you spoke about, down anywhere between 7 to 9% in this month itself. Just to look at HUL, it's down about 9% in the last 3 sessions, and that's the biggest cut that we've seen in HUL over a 3-day period since July 2013. And we've also had 2 brokerage notes in a span of 3 days, back calculating the forward valuations and implying future growth. The likes of CLSA, they've written consumer stocks in India have always traded at a premium PE, but however, the extent of PE expansion is what has perplexed even the most optimistic of all bulls. But tell you what, a lot of the brokerages themselves went ahead and expanded the PE multiples of these FMCG stocks. We got CS note today. Credit Suisse wrote that competitive intensity is back up in the FMCG space. HUL's 2 variants, Surf Excel, had a large wide space as P&G's competition wasn't as intense, and now they're coming back in the game. The price difference between HUL's offerings and P&G's offerings are not much, and HUL is also trading at a 10-year valuation high. All these things are coming to the fore right now, but these are not things that we do not know. HUL, after the first quarter management call itself, said that, competitive intensity is likely to go higher. Yes, it was trading at 53 times 3 days ago. Today, it's trading at 48 times FY20 earnings.
All right, Mangalam, thanks so much for getting us all those details coming in from the FMCG pocket. But one of the sectors which is definitely on my radar at this point is the metal sector. Take a look at JSW Steel and Hindustan Zinc. Sudden spike coming in almost all the counters across the board in the metal space in an otherwise weakening market. And keep an eye out for that particular space as well. So JSW Steel seeing a fair bit of spike. Hindustan Zinc is also gaining. Hindalco, Nalco, SAIL, all of them have suddenly become a little upbeat in the last few minutes of trade. Let's focus back to the market, and today that is what we need to take a look at. Take a look at rupee. It's gone below 71 rupees 90 paise to a dollar. So too early to say that there is some bit of support coming in for rupee today. So keep an eye out for that, and that bit of weakness again coming back while the lunch hour is on. Sensex, Nifty showed a bit of recovery, but as I have been saying that both the key indices, overall market is going to really mirror the way rupee depreciation is really taking place today. And keep an eye out on the bond yields as well, expanded to highest levels since November 2014. So that's adding to a fair bit of worry. And even though crude has come off the highs, but it's still at a higher level, and therefore a lot of pressure coming in. When it comes to the import bill also, that's one of the big worries that market will take cognizance of. But the overall markets across the board globally is also not helping us. Emerging markets currency have also been on the weaker side, though rupee at this point is definitely a point of worry. Take a look at some of the counters like Reliance Industries, has not been helping, but the metal counters are the one which has seen a fair bit of action in the last few minutes of trade. Now, moving on to some market opinion, then we spoke to Tushar Pradhan of HSBC Global AMC earlier today, who is also saying that Indian IT sector is gaining traction from a depreciating rupee, and he sees pockets of opportunities in the metals as well as the NBFC space.
Clearly, the IT sector is getting a pretty strong tailwind from the weakness in the rupee. And on top of that, we have seen pretty positive sentiments coming out of the US, which is the largest client area for Indian IT. I think a combination of all that and probably the headwinds that we saw of a very strong rupee in the last 2 years coming off, I think all of that is starting to show up in the numbers. We are also seeing very strong, I would think, body language from most of the IT majors. And this time the IT strength is actually running across not only the larger IT companies, but going down into the mid and the smaller companies as well. Indian metal manufacturers or companies in the material sector actually also do benefit from a lower rupee, because most of these global metals are indexed to the LME prices, which are dollar denominated, and as a result their revenues actually do start to go up. So as long as you have your debt under control and your costs under control locally, you'll start to actually make a lot better margins this year as well. If one tries to be a little more granular, you will find that there is plenty of opportunities even now. I think with the public sector banking sector in such a difficult space, I think lack of credit is really the bigger concern, and as a result I think these NBFCs are really filling the gap.
Okay, well, moving on, as the IndoUS 2+2 dialogue is set to begin, we have Parikshit Luthra joining in to tell us what's on the agenda this time around. Parikshit, over to you.
Well, this is a very crucial dialogue between India and US, the highest level dialogue that is taking place this year.
there would be discussions on trade, on Iran and Russia. India would be hoping for concessions. Remember, earlier this year, the Trump administration imposed tariffs on steel and aluminium, which is hurting Indian companies. We are looking for a waiver as far as the embargo on Iranian oil is concerned. Remember, that will kick in on the 4th of November. India is going to emphasize that we have tried to reduce our trade deficit with the United States by $1.5 billion. This year, we would be importing up to $2.5 billion worth of oil and gas from the United States. And similarly, when it comes to Iran, we are an energy-reliant country. We are reliant to the extent of 83% of our energy needs. So this is a point that will be made to the United States. Today, Mike Pompeo, who's en route to Pakistan, he made it clear that while there would be discussions on the S-400 air defense system and also on Iranian oil, he does not see any conclusion at this stage. He's saying these are issues that will definitely be discussed, but they will not be solved. Back to you.
All right, thanks Parikshit for getting us all those developments. An important news flash on your screen. Sources suggest to CNBC-TV18 that the Reserve Bank of India has refused to give any relaxation on the upfront payment for Parivartan ARC. Remember, this is one particular ARC for which the government and the REC wanted some relaxation because it is set to really address a lot of problems in the power sector and the stressed assets there. And let's take it straight across to my colleague Anshu Sharma, who's joining us with those exclusive details. Anshu, what does this mean and where does the government as well as the entire plan stand now after this?
So essentially about 34 stress assets are part of the list which the government is considering to resolve. And once the RBI guidelines which crossed the deadline after the Allahabad High Court didn't give any interim relief to the power companies. Now, government is mulling over Parivartan scheme, where earlier it was supposed to do a net book value assessment of each project. Now, as per the RBI norms, these stress assets will be evaluated upfront, and 15% of upfront payments will be required under the ARC or the asset restructuring company. And about 11,470 megawatt of assets will be part of Parivartan. The deadline of 15 days, which ended on 27th, was scheduled to end. Is scheduled to end in September 11th, where the lenders have to take these stress assets to NCLT. So Parivartan scheme framework has to be finalized as soon as possible, and about 11,500 megawatt of capacity is what being looked at resolving under this scheme. Back to you.
Okay, thanks a lot for that. Well, with that, it is curtains down on business lunch, but don't go anywhere. The market is worsening now. At least it's getting worse for the bulls. The mid-cap index is now down almost 300 points. Mid-cap radar